I hope you can hear me. I am Alexandros Tsadiras. I'm associate professor, and I'm the academic in charge of the undergraduate program in economics offered by the Open University of Cyprus. It is with great pleasure that I welcome today Sarah, who will be delivering a lecture on financial markets. Sarah is an associate professor in the finance department of the Faculty of Business of the Lebanese University. She previously had work experience working as an accountant in the private sector. She also holds a PhD in business science from the Lebanese University, and she currently teaches comparative financial theories, accounting, financial markets, feasibility studies, financial behavior, and public finances, a colorful collection of topics. Sarah, salam alaikum. Nice to have you with us.
Thank you.
Enjoy your stay. Welcome to the island. I hope we will have you back soon under better circumstances, of course, so we can meet you in person. That's basically that's the main introduction that I wanted to share with you. I think Sarah impressed us. I think it's about time I gave the floor to Erato for a short introduction on the broader framework within which this presentation is about to take place. Thank you very much to everyone. Have fun, take care, and Sarah, all the best.
Thank you a lot, Dr. Alexi.
Hello and good afternoon to all of you. My name is Dra Sarah, and I am the coordinator of international relations of the Open University of Cyprus. So it's great to have here with us Dr. Sarah Makhoul. As Alexandros already told you, she's an associate professor at the Lebanese University, and she's actually visiting the Open University of Cyprus this week under the context of the Erasmus International Mobility Programme. So we're very happy to have her here, and we look forward to more fruitful cooperation with the Lebanese University in the context of Erasmus. So Sarah this week is delivering lectures to students of the undergraduate program in economics and business administration of the Open University of Cyprus, as well as the postgraduate program in banking and finance. And all lectures are recorded and will be available to our students on the e-learning platform, but are also open to the general public and whoever is interested in them, and will be available on our YouTube channel as well. So without further ado, let's give the floor to Sarah for her lecture in financial markets. Thank you, Sarah.
Thank you, Erato. I'm really glad to be with you all at the Open University of Cyprus. My name is Dr. Sarah Makhoul. I am a PhD holder from the Lebanese University. I am the head of department of the finance at the Lebanese University, third branch. I also am an associate professor. I am an instructor at the Antonin University. I am a reader at the MUBS. I am the financial manager of TIL program powered by UNICEF at the Lebanese University. I also, when I have time, I am a volunteer at Saint-Termin at the Lebanese University. I'm really glad to be among all of you with this week, and especially with this session. Actually, it is a topic that I really enjoy. I teach at the Lebanese University the financial market, so I teach it for the undergraduate students. So it is like targeted for you actually. So today's session will be about the financial market. And the main outlines that you need to know are some definitions about financial market, the main role, the importance of financial market, and the importance of all the different parties doing own roles on the market. You will get to know the difference between direct and indirect finance, and you get to know the difference between the debit economics and the market economics, and how to work toward how to work from the debit economics toward the market economics. And of course, you will get to know how to deal with the regulated market and over-the-counter market. A big quick info you will get to know about the stock exchange, the main role, regulations, functions, indexes, and the authority existent on the financial market, and the main role of such authority, and how to deal in main role. So let's start about what is a financial market. Anybody knows or have an idea who can type it in English in the chat box about the financial market? What is a financial market? Or you can raise your hand and I will give you the floor to any idea? Actually, thank you, Andreas. Yes, it's where trading takes places. So, it's where trading takes places, but you need to know the main function of what is the financial market. Actually, the financial market is created to make the connections between those who have an extra funds and those who needs those extra funds, and the persons who have the extra funds, the surplus, goes to the financial system, and the financial system search for businesses, business owners, investors, or what we call financing needs people. So this is the link, the main link of the financial market. So you have extra funds, and those extra funds needs to be well maintained, and needs to be invested. So those extra funds needs someone to invest, and they may need, or they may search, or they may go directly to those who are needing those finance, or they can go to the financial system, and the financial system, he is the one responsible for searching for persons who need those finance. So when we are facing balances, so if you are on a positive balance, so you have the capacity of financing, so your gross savings are greater than investors, so you have extra funds. Those extra funds means that you have financing capacity. This surplus, those extra funds, needs to be putting on system to be invest, and you are willing to do such invest. The fact is that this surplus is going to be lended to agent who is in need for the financing. If you are on the negative balance, so their gross savings is less than investors, so you are in need for this funds, for those money, so you are in need for financing. You call on agents who have the financing capacity, and in order to obtain such funds, that it's necessary for your economic activity, for your own business. So if you are a person with a positive balance, that means you are the person who is having the financial capacity. And if you are on a negative balance, so you are the investor who needs for the extra funding, so you call for the agent who have the capacity in order to lend you those money in order to do your own economic activity. It is like a win-win situation. So the financial market refers to any marketplace where the trading of securities occurs, like Andreas mentioned, including stock market, bond market, forex market, any derivative market, among others. So the financial market is vital to the smooth operation of capitalist economy. So it is the place where trades are done. It is the place where many securities are traded. So we will get to know more about different types of markets. So you will get to know about different types of financial market. So we have the stock market, we have the over-the-counter market, we have the bond market, the money market, the derivative market, the forex market, and nowadays we can say that we can add the cryptocurrency market. Anybody knows about cryptocurrency who can share a quick idea about it? In English. Do you know about cryptocurrency market? Are you aware of such a market? Blockchain, digital money, exactly. Thank you, Christina. It is nowadays the digital marketing, it's so trending and it's so in demand, and it is so like the mining system, and it has it has its population, and it has parties, active parties existent on such a market. The stock market and the bond market, do you know the difference between both, the stock one and the bond one? The stock market? Yes. The bonds are like a loan. Exactly. It's likely, this is how I simplify the definition of bonds. Those are like loans. We will talk quickly about bonds. And the stock, you will be like, if you are a stockholder, you will be like what to the company? If you are a stockholder, you will be like a shareholder to the company. We will talk about the difference between the stock market and the bond market. And you know, when it comes to the over-the-counter market, you will get to know it, how it may function toward the regulated market. And so let's have a quick tips about the stock market. It is like the most common among the financial, the most common among the activities of the financial market. Everybody knows the stock market. It's like the venue where companies list their shares, and they are bought and sold by traders and investors. On the stock market, you will get to know that the stock exchange deals with the stock. The stock is like you are, if you are a stockholder, so you are a shareholder to the company. You are one of the company strategic member nowadays. So if you are a stockholder, you get to know, you will get a dividend against the investment that you have done by buying this stock. You can trade your stock on the exchange stock exchange, and the value of this stock is related directly to the law of the market between the supply and the demand according to this stock, and it's like most likely well known to be indexed where on the stock exchange. We will get to know few indexes at the end of this session. So when it's come to over-the-counter market, it's like it is a decentralized market. That it's like the meaning it doesn't have a physical location. Trading is conducted electronically mainly, and all participants in such a market trade securities directly between two parties without a broker. And this over-the-counter, when we call it, it's decentralized. So you enter this market on your own guarantees. There is no standards for there is no authority on this market. Between and authority, we put it between two parentheses. So you do the trading electronically, or you directly do this trading, and you don't need a broker to do so. So it is on your own behalf that you do the action on this market. When we talk about the bond market, as Christina mentioned, it is a kind of a secure investment. It is a security in which investors loans money for a well-defined period at a pre-established interest rate. When you come to investments and you choose to invest in securities like bonds, you are investor who have issues when it comes to risk. So investors who face issues with risk choose to invest in bonds because it is so secure. And when we talk about securities for investments, when you choose the bond market, you are investor who is given as loans for defined company or to the government, and this bond offers you a well-defined characteristic, and those characteristics are well defined on the bond swoosh. So you will get to know exact period of investments. It depends on between 3 months to 20 years, and it is like you will get to know the exact interest rate. It is pre-established on this characteristic on this bond, so we'll get to know each coupon you will receive against the investment that you are placing in selecting such securities, such items. So the bonds market are like safe side investment for lots of investors nowadays, and it is a wild market who get to expand after the coronavirus pandemic. So investors got scared about their own investments, so they turned their investments into a secure area, like selecting the bond market. If you go to the money market, typically the money market trades in product with highly liquid short-term maturities. We can talk here about exchange, about the money, the actual money. It is a high degree of safety in a relative low turn in interest, because you trade on very liquid short-term maturities. You trade with actual quick investments return. So it is low in return when it comes to interest, but it is high liquid. So people who don't like to put investments in assets, they go to select the money market because it is more liquid for them. So when it comes to derivative market, a derivative is a contract between two or more parties whose value is based on an agreed upon underlying financial asset, like a security, for example, or set of assets like an index or a stock. So derivative markets deals with both the over-the-counter derivative market and the exchange targeted derivative market. So you will have, if you are over-the-counter, the forwards, the swaps, and if you are over the exchange traded derivative market, you can deal with the futures and the options. And for the options, we have two types of options. We have the call options and the put options. And those are derivatives that assure a certain of security for investments. They are created to help and to secure some investments. So investors got to choose options if they have a certain uncertainty toward the market, and they need to protect their assets or to protect their security. They may go and select an option toward these protections. So we have also the forex market. The forex market is the foreign exchange market. This market where participant can buy, sell, hedge, and speculate on the exchange rate. So we are now talking about the exchange rate. So we talk about currencies. So the forex market is the most liquid market in the world, and it is like it holds lots of liquidities. So as cash is the most liquid of the assets. So we talk here about the foreign exchange. For example, if you are exchanging euros to dollars, so you go to the forex market to do such exchange. If you are exchanging dollars to euros, you go to the forex market to do such an exchange. So it is like the most liquid market in the whole world, and it holds a lots of capitals. We're talking about more than $17 billion dealing in such a market. This is how much it owes. This is how much it equals when it comes to the most liquid tradings ever. So the commodities market is like it is like the venue where products and consumers meet to exchange physical commodities such as agricultural products. We know, like the corn, the soybeans, the sunflower seeds. It is like where you meet the energy products like oil, gas, carbon credits. And we talk about where metals commodities are to meet, like the gold, the silver, the platinum, or soft commodities like cotton, coffee, and sugar. You know, those are the most exchanged products all over the world, and they go as the raw materials for such of products. So you can find those traded commodities on the commodities market, and you can deal with them on the stock exchange. As you go to the selection of the commodities market, you will get to know how much a plate of gold is equal, or how much a plate and gas barrel is equal on such a market. And as I mentioned before, nowadays the most trended market is the cryptocurrencies. And in the past several years, it has been to introduction and rise of the cryptocurrency, also known as the digital money, the blockchain technology. We know two main actors in such a market, like Bitcoin and Ethereum. It is a decentralized digital asset, and it's like based on the blockchain technology. They do lots of digital money, and it is nowadays the most trending. And the most trending is to get to know the behavior of investors on the cryptocurrency market. And once you go deeper into to know this behavior, you will get to know more about such a market and such investor who go with such technology. And it's raising a lot, and it has its own actors, and lots of different people nowadays all over the world are starting to deal with cryptocurrencies, and lots of countries all over the world start recognizing the cryptocurrency, and lots of small local shops start to accept to pay and to accept currencies from crypto investors against buying or selling any items. So you need to know we have two types of finance, the direct finance and the indirect finance. When you go to direct finance, it's where the financial capacity holder meet directly with the person who needs those finance. He doesn't go to the financial system, he goes directly. So it's like when when Maria is a financial she has a financial capacity, Maria has a surplus, and this surplus needs to be invested according to Maria's perspective. So Maria knows that I need financing, so she contacts me directly. So me and Maria, we meet and we discuss the agreement between among the two of us, and she gave the capacity to run my business. This way we are on the direct finance. Otherwise, if Maria have the capacity of financing, but she doesn't know anybody on the market, or she is lazy, she doesn't want to go to search for person in need, or Maria needs to be secure about her investments. So nowadays we are talking about 3 different behaviors that may occur Maria. So Maria needs to be safe about her surplus, so she go to the financial system, and give him her capacity of her extra capacity, her extra funds, and she told the financial system, hey, look, I want you to do the investment, I want you to search, I want you to secure the returns, I only want to receive the extra fees, I want to receive the extra credits. You do the management, and this financial system, he is the one who search for financial needs. So the financial system search for me, or I search for the financial system. We meet, I make the deal with the financial system, and financial system have his characteristic, cartography, and we set the deal with the financial system, and financial system make sure he take from me the right commission, the right fees, and we call it as the debit interest. And Maria makes sure that she receives from the financial system the credit interest upon the given funds, the extra funds that she placed at the financial system in order that she has a gain about her invested money. And we need to talk about the debit economics and towards financial market economics. So if you talk about the debit economics, it is where this economics deals with lots of loans. This economics has like on its infrastructure. This economics is so under lots of financial charges. We talk about here like Lebanon. He's facing lots of loans with the international affairs, and he always needs money to maintain infrastructures, and he needs to work on the financial structure to maintain a better situation. And on the other hand, we have the financial market economy, where economy is where economic is based on tradings, on the stock exchange is well maintained, the financial market is well structured, well regulated, there is authorities, there is law, there is regulations, there is a clear vision, there is a clear different path for each party existent on this market. So all the countries facing the debit economy, they look forward to become to become more on the financial market economy. So if you are like in France, they are on the financial market economy, and in Lebanon we look forward to become to exit the debit economy and to work on toward a better financial market economy, where different parties can have in return an actual return on all given investments. So we have two methods of financing, the internal one and the external one. The internal one is when you are self-financing. You have your own money. You do your investments with your own money. You do your business with your own money. You do your startup with your own money. If you are an entrepreneur, if you are an entrepreneur and you are launching your startup, you will do it. If you do it with your own money, so you are self-financing. And if you are self-financing, so you are on the internal level of methods. If you are an external, so we go with both direct and indirect economy financing. So the direct, where the economic agent with financial capacity meet directly on a market the agent with financial needs. And on the other hand, we have the indirect, where a financial intermediary acts as a screen. This screen, it is like the merge he is between the agent with needs and the agent with financial capacity, and he is like the screen. You go to the financial intermediary and he will take a good care of your investments. You need to pay if you are a financial needs, you will need to pay the fees and the commission. And if you are a financial with capacity, so you will be awaiting the returns of your funds. So when we go with the difference between direct and indirect finance, so in the direct finance, the broker matches the investors who has excess resource with the one who needs those resources, and in return he receives small commissions on the transaction, especially if me and Maria, we meet through Mike. So Mike will have his own commission on this meeting transaction from Maria, who have the capacity, and he may have also this small commission from me, because he was the one who gave Maria my profile, and he helped me. In the indirect finance, the intermediary places the excess resource on its balance sheet and seek to allocate them to investors who need to have a means of financing. The intermediary, which can be a bank or an insurance company, but in most like we are all known as the bank. A profit is made from the difference between the deposit interest rate and the debit interest rate. The difference between the deposit interest rate and the debit interest rate is the profit that the bank have after this operation. So when you talk about the debit economy, it's based on the creation of means of payment by bank when the request of their customers, they grant credits. So if a country they grant credits, lots of credits, which means you are not productive, which means that you always needy for money, and you are not producing in any kind of investments that may increase your investments, they may increase your received fund. So you are needy. If you are needy, so you need more credits. If you are in this situation, you are on debit economy. So in our financial market economy, most financing needs are covered by the issue by companies of financial securities, like the share, like the bond, like commercial papers, where investors subscribe. A financial market economy is characterized by the direct call for savings. So you have you are an investor, you are searching to place your your extra funds, you are on the search to expand your money. So you will be like searching for shares to put your investments, searching for bonds to put your investments, searching to put your investments, searching to create extra funds from your surplus, your capacity, your extra capacity of funds. So you will be called that you are on a financial market economy. So if you make a difference between the market economy and the debit economy, when the financial market is underdeveloped, the economy will be more on a debit economy. The lender's risk is limited to non-payment of interest and the principal on the loan. In our financial market economy, bank loans will be intended for households or for SMEs that do not have the capacity to access financial market. So you can see the difference. If you are on the debit economy, you will need the loans to pay your daily bills. But if you are on the financial market, bank loans are given to SMEs to develop their capacity, to develop their share on the market, to expand their segment, or to while they're targeted. So the risk in this case is linked to variation in the value of the financial securities. It is directly related to the law of the market when it comes to buy or sell of such securities in the market. So this is the difference between debit economic and the financial economic. So if we want to go to what is a financial market in one sentence, so it is the place of exchange of financial assets. It represents the market for stocks, for bonds, for derivative securities as like one sentence. So what is a market? A financial market? It deals with the functioning of the financial market. It deals with its organization and its principles and its main operations on working on this market. So the main role of the financial market, it allows investors to invest their funds. It's for company, it allows them to have necessary resource, especially if they are, that's why they do issue the shares. They do have issue of bonds, corporate bonds, or to make investments on the market. For the states, if you are talking about what is the role of financial market when it comes, as you are a government for the state, the financial market is used to have the resource necessary to the development of the country. That's why the states have they do publications for bonds, and they are called treasury bonds. So they are related directly to the states. So people or investors are now giving the government loans through the treasury bonds. So those money are used in developing the country. They are used on programs for like infrastructure programs to make sure that this government this country is on the process of development. So the financial market is also called the stock exchange. It's the place where agents with financial capacity meets the agent with the need of financial needs. And it is a long-term capital market on which financial products such as securities, stock, and bonds are traded. So the structure of the financial market, there are issued and exchanged titled for corresponding to a part of the capital of the company, and which give their owners, so they are called as shareholders, the right to the payments of a share of the profit made by the company called the dividend, as well as the right to vote on the decision-making process to be taken at the general meeting of the shareholders. So that's how. So if you are taking part at the stock market, you will be a shareholder. Being a shareholder, so you will receive a dividend against the share that you paid for, and you will have the right to vote at the general meeting of the shareholders. And this decision, so you will be a decision taker in this company. Your vote will affect the decision process taken on a strategical level of the company that you own a share in it. If you go on the bond market, which is the loan, there are traded as debit securities called bonds, and remunerated by a fixed income and a fixed interest rate, and you will receive a coupon each year at a specific time, and everything is well specific according to the specific characteristic of the bond that you have bought and you have put your investment on. So it's still loading. So the main function of the financial market as mentioned before, is dealing with fluctuation in the prices of a transferable securities that depends on the offers and demands made of them by the economic actors acting on this market, like the states, the businesses, the households, the institutional investors. For example, we give the example of the case La Caisse des Dépôts, and for the foreign companies, we can go as the OPCVM, the CCAFs, the FCPs, like the mutual funds. Those are the main functioning, the main active functioning on the financial market. So the expectations of actors and the effects of imitations influence the fluctuation in the prices of equities, like on the share and on the bonds. So the announcements of a social plan is likely to inflate the profits of a company, will drive up the share prices, and the fall in interest rate will have the same effect, since it will be synonymous with a reduction in the financial cost, and therefore with a higher profit prospect on the investments in the functioning of the financial market. So the financial market can also be broken down into capital market, money market, primary versus secondary market, and the listed versus over-the-counter market, as mentioned earlier. So we get to know the primary market and the secondary market. The primary market is where if you want to go to the stock exchange and you want your share to be listed on the stock exchange, you go to the stock exchange and you will tell them that you want to be indexed on their platform. They will tell you, okay, you need to give us all the information about your share, all the information about your company. So you will be placed on the primary market, you will be evaluated on the primary market, and you will be like shaping yourself on the primary market. And first edition of price will be on the primary market. This price will be like the opening price of the secondary market, and the secondary market is called also the market of auctions. So on the secondary market, you will be listed as index of traded index, and your share will be the price or the value of your share will be according to the fluctuation of the offer and demands toward your share. So In the primary market, you will have the startup price, the price that you will be opened on the secondary market. But once you are on the secondary market, the value, the price are all related according to the law of the market. So no one can interfere with the price. You are under the law of the market. Again, you are traded on according to the offer and demand toward your share. So we ask ourselves, how do financial market work? What are the main function of financial market, and why are financial market are so important? So how and what and why it is so important to that you know about the financial market. So how do financial market work? So despite covering many different assets classes and having various structure and the regulation, all financial market work essentially by bringing together buyers and sellers in some assets or contract and allowing them to trade with one another. This is often done through an auction or a price discovery mechanism, and it is done on the stock exchange, if you can say so. What are the main function of the financial market? It allows efficient allocation of capitals and assets in a financial economy by allowing a free market for the flow. It's so important of capital, the financial obligations and money. The financial markets make the global economy run more smoothly, while also allowing investors to participate in capital gain over the time. So it is so important for all investors. So why our financial market is so important? So here we can talk about working toward financial economy, working toward capital growth, working toward trade, toward investments. It's like creating new opportunities, doing some commerce. So you are on economy activity. You are having the growth of your extra funds that you are having. So the main actors of the financial market. So you have government, you have central banks, you have banks, operators, you have institutional traders, you have brokers, you have lots of actors existent on the market that can help you, and that can you can help and they can help you to growth on your capital invested. So the main operation existing on the market, we can cover them into three, and those three operations can show us three behavior of investors existent on the market. So we have the arbitration, we have the cover, and we have the speculation. Does anyone know such terminology, such keywords? When we talk about the cover, what does it means? If you are in investors and you choose to cover, what does it means? Be brave enough. You can raise your hand and share your idea in one word. So speculation. Anybody have heard about speculation? Christina, you are saying that cover is to provide financial backup. You are approaching the main definition of cover. Can you be more specific about backup or financial backup? It's like toward what? When we talk about operations and you took actions into different positions, you are facing what? One word. Risk, exactly. Thank you, Christina. It's so important. So when you are on operations and you are dealing with investments, you are facing risk. And when you are facing risk, you need to do actions. So those actions actually reflect you as behavior, reflect you as operator. So it reflects your own perspective toward the risk. So if you are on the cover system, so you are covering yourself toward the risk existent in the activity or in the financial assets that you have selected. And somehow, if you choose to the cover, so you are covering yourself from risk. If you choose speculation, it's like you see the assets from the profit system. You know, in each share there is the risk attached. So more the profitability, more the risk, and all. Even though you go by speculation, you know that you know what is included, but you choose to go toward the profitability of the selected share. Or in the cover system, you go, you know, it's like too risky. I will go with where is the minimum risk attached to the selected share. That's how you do the evaluation. If you are on the arbitration, so you are the balanced investor, balanced selector, balanced operator. So you think before you go. Once what we say about thinking before you go, you do the evaluation, you do the analysis, you do the interpretation of such a selection before you go and to pick this share, neither than the bonds, neither than to go the options. So you think and you evaluate and you assess your the existent risk attached to this assets, this financial asset before you go with the investment, before you go with the go investments or go selections. That's how we have the three operations, and those three operations open us to three financial behavior toward the risk. So we will get to know the risk-off, risk-feel, and the risk-offage. Those are three behavior that may be occur once you are an operator on the financial market. I invite you to go to see more about those three types of behavior. You will be so amazed by the financial behavior, and you will get to know more about why we have people who choose the cover, why we have people who choose the speculation, and why we have the balanced people who go on the balance system and do the analysis before a go selection. So and somehow those operators, you can go with aggressive investors or defensive investors toward selective types of shares or an assets or financial assets to be like existent. So if you want to have a quick look about the difference between regulated market and over-the-counter market, between the market and the over-the-counter, we go with this distinguish the regulated market. There are guarantees, well-defined standards, well-defined functions. You get to know who you are doing the negotiation with. You get to know the buyer, the seller. There are rules, there are conditions to be accepted as businesses and for carrying out any transactions on this regulated market. On the regulated market, there are financial market authorities. We can call that the IMF is one of the authorities existent. For the Eurozone, the regulated market is called Euronext. On the opposite hand, we have the OTC, the over-the-counter market. It's like all subject of regulation are required by the market, and this type of market does not offer investors any kind of guarantees or functions regulations. You go on this market on your own will, and you go and you support your own financial decision-making process. So we get to know the regulated one. The stock exchange is the place where securities are exchanged. A stock market or the venue where buyers and sellers meet to exchange equities, shares of public corporation. Stock market or a vital component of a free market economy because they enable the democratized access to trading and to exchange of capital for investors of all kinds. They perform several functions in market, including efficient prices discovery and efficient dealing. If you go to the United States, the stock market is regulated by the Securities and Exchange Commission, SEC, and local regulators bodies. So we got to know the Euronext and the SECs. So as a stock indexes, the measures it measures the evolution and the performance of the financial market, like stock market. Stock or indexes is used on the stock exchange. Like the most important on Euronext, you get to know the CAC 40. It is calculated from a sample of 40 listed French companies selected from the top 100 market capitalization on among the French companies. We have the SPF 120. It is made up of the large companies, like includes the CAC 40, the companies listed in the SPF 120. The condition of accepting companies is to choose the most liquid one. We have the SPF 80. It is made up of the companies in the SPF 120, but it does not include the CAC 40 index. We have the SPF 250. It includes company from the first and the second market, including the SPF 120. So this index makes it possible to follow the evolution of the market as a whole when it comes to French companies, and you can find all the CAC 40, SPF 120, SPF 80 or SPF 250 on the Euronext next deal. So you are invited to do such investigation. How to receive orders on the stock exchange? Orders are grouped together upstream by the banks. They transmit your order to the brokers, who execute them via a computer system according to the mode chosen by the clients. So the clients choose the mode of orders. So it may be at limited prices or triggered stop order, or at the best limit, or at the market. So the clients choose the modality of orders on the stock exchange, and how its executions of the orders, how they deal with given orders. It's so easy. Two orders with the same direction and the same price list will be executed in the order of their arrival. So first to arrive, first to activate as ordered. The same when it comes to a stock purchase transaction, priority will be given to the highest price. Purchase order will therefore be ranked in the descending order of prices. In the case of share sales transaction, the priority will be at the lowest price. The sell orders will therefore be classified by an ascending order of the prices. So also, as mentioned before, when you talk about stock exchange, it is a regulated market, so they have authorities, and the financial market authorities are with a mission when it comes to financial market, and they fill in those missions, and they take it like seriously as serious as they can on the market. They have rules. They lay down actually the rules. Authorities, players approves information, documents on the financial transaction, and approves collective savings products. That's how you know, as a trader or seller or buyer, you know if you are actually dealing with approved share. So you have no doubts about whom you are dealing with. Those informations are approved. Those players are authorized by the financial authorities. So each single existent players is well known, well defined, and they have all documents for their active securities or active financial assets existent on the market. So your investments will be like so secure. You know the player, and the player is real. It's not a fake, and it's not a scam. The authorities monitors the players and the savings products subject to its control. They make sure that you are not doing speculation for speculation. They make sure that you are not carrying out information non-authorized. They make sure that you are giving symmetric information and transparent information and clear information for all existing players on the market. Authorities monitor the players in order not to prevent any kind of speculation that may affect the value or the price of the assets, the financial assets. And it carries out investigation and do the checklist on a daily basis on each player and each given active actor on the market or operator on the market. And they have the power of sanctions. If you go to visit the IMF website, you will be they expose all the sanctions. They do it, and they do it loudly, so you will get to know if Maria have done any bad behavior. They will sanction Maria, and they will post on their official website that Maria has been sanctioned because she have done 1, 2, 3, because they have done all the investigations about what did Maria on the financial market. So sanctions are published, so you will get to know the one who have done bad, who have behaved bad on the market. Also, the authorities inform severers and offers a mediation system. Everything is clear, everything is transparent, everything is well published on the market, so you will get to know everything in our well defined subject, well defined platform on the market. So the main role of the authorities is to ensure the protection of savings invested in the financial instruments and all other investments given rise to a public call for savings. Its main role is the investor information and the proper functioning of the financial instrument market, and it assures information transparency. It makes sure that all information are transparent. It is against any non-professional behavior or any in any case of speculation. It helps the market to be more safe, to secure savings, and to secure good functioning of all operator on the market. Thank you for your time. Do you have any questions? Let it be in English. Any questions? Feel safe. Ask anything you want. Thank you, Maria. Sorry, Maria, I was choosing your name because every time I put my eyes on the list, there is Maria. So Thank you for being an attendee at this lecture. Thank you. Thank you. No worries. Thank you. Any other questions? All data will be shared with you at the end.
Thank you, Sarah. I will just share with our students and public the link to your lecture yesterday on international banks and finance, which is posted on our YouTube channel, so that they can have a look. And if they have any questions on that, I mean, they can discuss with you tomorrow as well in your last lecture on financial markets or financial field.
I will be here if they have any kind of question or any kind of needs for assistance. I am here for them, as you know, Erato.
Great, thank you. So I shared the link with everybody. So if they have any questions, they can refer to you or discuss with you tomorrow in your lecture tomorrow. Thank you very much, and thank our students for their participation as well.
Thank you.